Johnson & Johnson shares are little changed after the company's fourth quarter earnings expectations beat estimates by a penny. Joining us right now to talk about it and what he sees in 2024 is Joe Wolk. He's Johnson & Johnson's CFO. He's also a CNBC CFO council member. Joe, I want to thank you for being with us this morning, and let's talk through a little bit about the numbers. Numbers were a little better than expected. A lot of that came from strength in the med tech segment. What are you seeing?
Yeah, good morning, Becky. It's a pleasure to be here with you. Fourth quarter really capped off what was a very strong year for Johnson & Johnson. The financial numbers, I think, speak for themselves. If you look at 7% top-line sales growth, 11% EPS growth with cash flow generation of over $18 billion. Those are very satisfactory for a CFO. But what I'm really pleased about is our ability to exceed financial expectations that we had at the beginning of the year significantly, while also investing for the long term. So the near term, as well as the long term, looks very strong at Johnson & Johnson. I think this time last year when we spoke with investors, they had questions about our ability to power through the Stelara loss of exclusivity, Johnson & Johnson's largest product. Yet in December, we had a chance to explain to them just how robust our innovative medicine or pharmaceutical pipeline is, with 10 products having the potential for $5 billion in revenue on peak year sales. In medtech, they were asking about the sustainability of the growth improvement that we had in prior years, and the fourth quarter was a great indicator of just how strong that business is, growing at 9%. We ambition to be within the top performers within that segment. I think the fourth quarter will be illustrative of us being very close to the tippy top of that segment. So,
Joe, Carrie Firestone was with us earlier, and she said what people really want to hear from the company is, do you anticipate that you're going to continue to see somewhat better numbers through the year as people come back for surgeries and procedures? Is that your expectation?
Yeah, we've seen, I'd say, elevated procedures that continue after the pandemic. We see those following through in 2024 as well. So this new level of growth that we've attained in medtech, in addition to moving into faster, higher growth markets, such as the Abiomed acquisition we did 13 months ago, which is beating the deal model, beating the expectations the street had when we acquired that business, are very much in line and within our expectations for 2024.
You did give some additional guidance today, just saying that for adjusted earnings per share for the full year, you're looking at $10.55 to $10.75. The street was just slightly above that midpoint of the range at $10.68. And I guess maybe that explains some of the stock's not doing much right now. It's down by about 47 cents. You had given some guidance in December, and I think people were already kind of at a lot of these points. What can you tell them about anything else you've seen over the last month?
Just that it continues to be very strong. So we ended the year strong. The first few weeks in January look like we are operating in that world of higher procedures, good prescription growth across our very important medicines and oncology, immunology, and neuroscience. So I would say everything is as we outlined in December, which not only, again, spoke about the near term, but also the long term, the second half of this decade, how well positioned Johnson & Johnson is for success.
Since the last time we talked to you, Eli Lilly has come out and said that it's going to do some direct-to-consumer sales. It's a totally new model. Does J&J have any idea of potentially following that?
Yeah, we're looking at all opportunities as well. There's obviously been a lot of discussion, and there will probably be continued discussion in a presidential election year about drug pricing. Right now, Becky, I can tell you that the noise is somewhat not based on a conversation of facts. So 58 cents of every list price dollar is going to the middlemen, and those discounts and rebates are not getting through to the patients. So we need to have a discussion. We need to look at different operating models, and we would certainly look across a multi-factorial set of solutions that benefit patients and really give them the opportunity to have these great medicines and innovations that we develop.